Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close comment for the grain and livestock. No two ways about it. It's a kind of a tale of two cities. You've got the stock market making new all-time highs, cattle making new all-time highs, and the poor grain market continues to just get beaten up like a red-headed stepchild that nobody wants. Corn tried to make a run on Friday and going up into the gap that's on the charts from the July 4th weekend. No dice there. We couldn't fill anything there. Soybeans as well. Soybeans had a 15-cent trading range, finished the day down a dime. Corn had an 8-cent trading range, finished the day down a nickel. Now, will we get a turnaround Tuesday? Hopefully, we'll see. We'll see if the crop conditions can do anything to move that needle. But I think that's the number one story is this market has been under pressure really for the past 2.5, 3 years in the grain markets, and every rally has been short-lived, and it's been a difficult marketing year. I mean, who thought we'd have the high for December corn in February, at 479 3/4, and only to see us drift all the way down to 407 a week ago today, 407.5. And I think if I'm a corn producer and I need help with my risk management, you just will be like, how do I stop the bleeding? Now, let me preface this by saying people that have been working with me since the beginning of the year, our cash sale records are as followed, and these are all sent out via email. There's all, everybody that was a client or a subscriber received these recommendations. We're 20% sold at guaranteed bushels of December corn at 470, and we are 30% sold of guaranteed bushels of November soybeans at 1066. On all other bushels, the best hedges we had for corn were probably 450 or 440. And by hedges, I mean they were substitute sales. We bought put options. Probably our best hedges for soybeans were 1050 to 1040. And again, those were hedged with options when we were on our highs. So when we got to those cash sale levels and I said, hey, let's sell some grain, but also let's protect grain. Those are when those recommendations went out. So the marketing year is a fluid marketing year. It's hard to get involved here near the lows, but it is what it is. Now, the good news is beans are in the middle of their trading range that we've had for the past 8 months. That's a positive, right? Because we're not sitting on our lows like we are with corn. Soybeans had a $1.15 trading range all year. We're basically at today's close, this 1025, 1026 area. We're roughly in the middle. 1020 is actually 1018 is smack right dab in the middle of the marketing range. So what does that mean? It means the bullish or bearish, you can pat yourself on the back and say, yeah, I'm right now. But in the next 6 weeks, when we get through the real growing season for soybeans, the risk is 50 cents, 55, 60 cents. If we get back down to where we were in December, 960, nobody wants to see that. So what do you do? Corn, if corn takes out 407, nobody wants to see corn at, 380 or 375. So since we don't know exactly what's going to happen. That's why we hedge. There is a cost associated with hedging. Yes, there is. But luckily, with these shorter dated options now, you can buy something for a week if that's all you wanted. I would suggest doing something for the next 30 days, doing September dated options. Those expire the last week of August. So we'll get through whatever risk comes here in the next month. You can protect $4.20, $4.10, or $4 corn. I had it in my letter this morning. If you didn't get the letter, call me, sign up, become a subscriber. If you are long soybeans are concerned, I would say at the minimum I'd want to do is do a $10 floor for the next 30 days. And those are trading around a dime. The corn puts that I'm suggesting are anywhere from 3 cents to 7 or 8 cents. So it's not horrendously expensive to defend that revenue. And you have to remember, with a put option, it's like buying your life insurance, or you don't buy your life insurance and hope that something bad happens, right? It's there in case we do come to harvest and we are down at, sub $4 corn or sub sub $10 beans. So that's how you defend against it. The flip side is you don't want it to get in a situation, now's not the time you want to be signing up for big accumulators, because if something happens, an accumulator is when they give you a price, but then they say, well, if it gets to here, you owe us double. That's a good deal for the person that's writing the accumulator, but it's not a very good deal for you. If something happens tomorrow and beans are trading $11, $11.50, there's going to be a lot of people that had those accumulators that were like, wait a minute, I hedged 20,000 bushels. Now you tell me you want 40,000 bushels? Same thing for corn. It may be great to think, sure, I'll sell a bunch of corn if it ever gets to 480 again, but you're not going to be singing that tune if something happens and we're well north of 480 and you have to deliver bushels that you didn't want to deliver. So be wary of those accumulators. That's all I would say. And if you've got yourself into them, make sure that you've got call options, which call options make money if the market goes higher. That's your safety net there. If you get run over by the accumulator, you have to have the call options before the move comes. And that's really the rub. People always say, what's so special about you? Why should I listen to you? And I always say, look, I don't have second sight. I'm not psychic. What I do have is 30 plus years of trading through a lot of different markets and helping, get through those and be in a situation to reward rallies, trade with the trend. If there's anything I learned being on the floor, it's to trade with the trend. And the problem is, if you're a producer, you're locked into your long bet, right? So you're like a one-armed trader. You're like standing in the pit, and all you can do is buy. And it's like good luck if the market drops on you. So that's the strategies that we use to defend against somebody like yourself who's always bet one way. You naturally want to be more concerned about put options and defending rallies than you are about participating, being long. So if you're going to grow 100,000 bushels of corn, protect that 100,000 bushels. You don't need to be going out buying another 100 or 200,000 bushels because you have a feeling corn's going to go higher. I approach hedging like it's a business decision. You're defending your risk. And we look at it every single day. What value do I add? Guys always say, why would I work with a broker? Well, I'm on top of this 24/7. It is my passion. It's what I really enjoy doing. I really like it when I can help clients make good cash sales. I like it when I have a hedge on that takes the sting out of a bad sell-off, or flip side, a bad rally. I work with end users that, there are people out there, believe it or not, that they'd be very upset if corn went to $6. I work with those guys, end users for bakeries or someone's running a feedlot. So it helps keep me balanced. It helps keep me staying away from being Babe Ruth and standing at the home plate, making called shots saying, oh, I promise you that corn's going to be here. I promise you that beans are going to be here. Those people didn't last very long when I was on the floor. And I don't think they last very long as marketing advisors either. So I'll always give you my best opinion. I'll always give you the hedge that I would use if I imagine myself in your situation. If we have a conversation, if you become a client, it's like, what's your risk? This is what I would do to defend that risk. And then we talk about how much of your business do you actually want to hedge? Do you want to hedge all your production? Do you want to hedge 2/3 of it, 1/3 of it, half of it? That's what a good marketing advisor can do for you. And that's the role that I see myself playing. Defend $4 corn, please. $4.10, $4.20. Please defend $10 beans. The next 6 weeks hold a lot of risk, possibly a lot of reward. But that's what I would say. And we'll see tomorrow if we can get a turnaround Tuesday. We'll see if we can get up and fill that gap in December corn. There's a gap in December corn. There's a gap in old crop corn. And that's the other thing too. If you've got corn in the bin, you need to be using, September futures and options for that. If you've got corn that's in the field, you want to be using the DEES because you want to be priced on where your risk is at. So the number to remember for December corn, we need to fill the gap. The gap gets filled at 432 3/4. Last Friday's high was 430 1/4. So 2.5 cents. We couldn't even get close there today. We finished today at 422. That's a big level. If we can get there, then maybe we've got a story for recovery. If you look at September spot corn. We need to get that contract back up north of 410, between 410 and about 417, if you're looking at the daily chart for SEP. And what was Friday's high? We couldn't even really get into it. We got to 411. 411. I mean, that gap that I'd be watching is actually 413. So there's your work's cut out for you. You need to get September corn. Certainly would be nice to fill that gap and see if we can get back. It would be amazing if we could get above the July 3rd high, which is 426 in SEP corn. So in the meantime, don't get super, super bearish down here. Make sure you've got a floor. Make sure you're defending what's left. What we don't want to be doing is having a conversation in November around Thanksgiving saying, wow, wouldn't it be nice to jump in Marty McFly's DeLorean and go back to, go back to February when we were at 479, or go back to, the highs and the beans and, sell everything there. We don't get that chance. We won't get that chance, which is why we hedge. So we'll wrap it up on that note. We'll see if tomorrow we can get a turnaround Tuesday. Look for my morning report. Goes out generally before 8 o'clock. I try and get it out before 7:30. But that will cover what happened during the night, the overnight markets. And we'll have the levels that you need to be looking at during the day. If you've got a specific problem, even if you're not a client, call me and we can have a discussion. I'm here to help. I'm looking forward to talking to you. Have a great rest of the day.